we know a bunch of things have happened with FTX. They have filed for bankruptcy, there was a heist, they falsely took out funds using the name of the Bahamian regulators, and Sam Bankman-Fried actually had a back way door where he could take out funds without the auditors or anybody else knowing. Well, that was just, now I would say, the first part of the saga, because now they are doing insider trading. So there is new information out there that FTX was doing insider trading. They were basically buying a crypto before they were listed on their platform. FTX trading firm Alameda Research bought nearly 60 Ethereum blockchain-based tokens before the company's own clients could buy and sell them. So, blockchain data from Argus, an analytics firm, showed that even though FTX said it would list the tokens first on their exchange so that investors, ranging from retail to institution funds like hedge funds, could purchase them, but that was not true. Instead, between March of 2021 through March of 2022, Alameda owned 60 million of the tokens from 18 listings of them. Knowledge that an asset like a token or stock is gonna be listed means that traders can make money buying them in advance and then selling them sooner. Now let's talk about some of the investigations. Listing a token adds liquidity and draws more investors to them, similarly to when a stock goes public. A listing can boost the price of a token. The founder of Argus says that what we see is they've basically almost always in the month leading up to it bought into a position that they previously didn't. It's quite clear there's something in the market telling them they should be buying things they previously hadn't. In February, Sam told the Wall Street Journal in an email that Alameda Research received information that was equal to other market makers on its platform. The traders in Alameda did not have more access to either the market data or trading or client information. We know that FTX has filed for Chapter 11 bankruptcy on November 11th. This has appeared because Sam has transferred $10 billion of customer funds from FTX to his own cryptocurrency trading platform Alameda Research and have held major FTX positions until this week. FTX faces a shortfall of $1.7 billion, while other sources say between $1 billion and $2 billion were missing. The crazy part is Sam was actually like a savior during the last summer crypto crisis. He was looking into buying BlockFi, Voyager, and this is what has happened today with FTX. FTX was valued at around $32 billion in February. Now, obviously, regulators in America and Bahamas have opened investigations, but I wanted to talk about one more thing, that FTX, yes, it was bailing out BlockFi, but apparently made BlockFi deposit their unused cash from their available credit lines with FTX. So they were basically using BlockFi's cash as well. So yes, FTX promised to bail out BlockFi, but they were using the last cash that they could possibly use to fund their Ponzi scheme. Okay, let's talk about this article real quick. They are saying that the BlockFi assets are custodied at FTX are false. That said, BlockFi does not have significant exposure to FTX and associated corporate entities that encompass obligations owned to us by Alameda Research, assets held at FTX.com, and undrawn amounts from our credit line with FTX US. While we will continue to work on recovering all obligations owed to BlockFi, we expect that the recovery of the obligations owned to us by FTX will be delayed as FTX works through the bankruptcy process. At this time, withdrawals from BlockFi continue to be paused. We also continue to ask clients not to submit any deposits to BlockFi wallet or interest accounts. Clearly, FTX was a sham. It is low-key insane. We've also talked about crypto.com. Please, if you have money on crypto.com, please do take it out. There is a high chance that, it could have the same result as FTX and BlockFi. So please take it out because they have been doing some crazy unethical stuff over there as well. So I hope you like this video. I do think the goal of this video is just to let you know that regulation, crypto exchanges is definitely the future. They definitely need to be more accountable and this saga is just like a never-ending saga with FTX, and now it seems like other platforms are also like in chaos. So if you do have your money in crypto.com, please do take it out. Binance seems like it should be okay unless the value of Bitcoin goes to less than 10K. So, but just to be on the safe side, I would just take all money out at this point, just to be safe. But I hope you enjoyed this video, and I shall see you in the next one. Bye.